Hello, Kiwi Incorporated. How can I help you?
So, I am calling in concern to the most recent video Kiwingly put out.
And what seems to be the problem, sir?
Well, I have two problems. It's a video about politics, and I don't like that. I am being explained how the stock market works by a minority.
Sir, why do you think Kiwi explaining how the stock market works has anything to do with his race?
Well, I'm a white, middle-class, right-winged extremist, male, so why wouldn't I be offended? Huh?
Okay, understandable. Thank you for your concern. And have a nice day. Ugh, woof, Cretin.
Who's that guy?
Oh, no one, sir. Just some racists who had a problem with what you uploaded. How can someone be so egotistical? I'll never understand.
Well, it's too bad that the video will never be taken down, ever!
Hey, John!
My name is Kiwingly, or you can just call me Kiwi, and welcome back to the channel. How are y'all doing? So, I got a great idea the other day while I was sitting on the toilet.
Sitting on the toilet. Sitting on the toilet. Now flush.
You see all these political posts on Twitter, but you never see anything about the stock market. So, as a law-abiding and biracial citizen, let me explain to you what the stock market is and what you can do to help it grow. But explain to you as if you have now suffered an IQ loss of 50 because of the quarantine.
Do you know what it feels like to fall in love? Take off your top, ready to fuck.
Before we can get into what the stock market is, you need to know what stocks are in general. Stocks are essentially the equivalent of how investors symbolize how much of a percentage they have in a company. Within this symbol, whether the future of its shares of a company starts to decrease in price or increase in price directly correlates if you have lost or made money. The stock market is essentially an entire marketplace for buying, trading, and selling stocks, being responsible for showing accurate information for companies with how much these stocks or shares are worth. The stock market started as civilized countries started trading with other countries. With many entrepreneurs wanting to create huge businesses, a lot of investors would pool together to create these businesses. As a result, you have a direct result of partial ownership of companies according to how much money you put in. This practice has gone on in such a more substantial way that businesses every day require investors' help to start up. And once they do, those same investors are then handed a percentage of the company's revenue and profits. Have you ever watched Shark Tank? Well, this is basically what I'm talking about.
Poo-poo. Poo-poo. Pee-pee poo-poo.
The first ever shares of a company was started by the Dutch East India Co. when they handed out shares/stock/partial ownership for their company for any investors who wanted to jump into the ring. The practice started to gain traction all throughout Europe and the established world. The need for a common place to trade these stocks became even more needed. At first, it started in a London coffee shop where they used this meeting place as a common place for any investors looking to buy, sell, and trade stock. And then this happened.
You know what, mate?
What you saying, you bastard?
We're pretty much rich, mate. Why don't we just buy this coffee shop and make this an even more official meeting place?
Bloody good show, mate. What a glamorous idea.
And the same investors eventually took over the coffee shop and renamed the meeting place to the stock exchange. And with that, the first ever stock exchange meeting place was established in London in 1773. And as America loved to do in its early ages, they copied the same practice with its own first exchange starting in Philadelphia.
Hey, have you heard what they're doing over there across the pond?
Nah, Chief, what have they been doing?
They started some stupid stock exchange thingy that allows investors to get together in one place and buy, sell, and trade stock. What a stupid idea.
Well, that's kind of a good idea, actually.
Yeah, that's what I was thinking.
I mean, let's do it. we live in early America, so we're basically England without the same government. Ever heard of Wall Street? Yeah, you know that street that's right off of Broadway where they make the Black Alexander Hamilton, which is a great show. I suggest you all to see it if you're able to. And Times Square, home to this addict, this ad, and these hecklers. But anyways, Wall Street is home to the biggest exchange in the world. The market there opened on May 17th, 1792, and defined the world's economic future. As you may or may not know, the stock market involves dealing with prices of gold, silver, the US dollar, or how much the PewDiePie store is doing. But seriously, the stock market holds the biggest companies, subsidies, and monetary currency, no matter how insignificant each are. Obviously, you are going to find your biggest players like Apple, Amazon, and Google, but you're also going to find your indexes that are usually always at the top of your screen, or in the corner, able to be seen, that define the economy of the entire world. Let me talk about the top 4. The Dow Jones Industrial Average is an index that tracks 30 very large blue-chip businesses, which are just nationally recognized, well-established, and financially sound companies. They usually sell high-quality, widely accepted goods and services. Blue-chip companies are known to survive throughout insane economic downturns. These companies include big boys like Apple, Coke, Nike, Procter & Gamble, and Intel. The S&P 500 works kind of similarly to the Dow Jones by tracking an index of 500 large-cap companies. Large cap basically meaning take how much one stock is worth for a company and then multiply it by how many shares are owned by these thousands and millions of people, and you'll get that company's cap. Which, again, can be compared to blue chip companies because they obviously are going to sell good products if they have such a high number of shares out there at such a large price. Some of these companies that the S&P tracks include Microsoft, Amazon, Facebook, Johnson & Johnson, and Visa. The NASDAQ is a global electronic marketplace for exchange. It started in 1971, being the first marketplace exchange ever able to be trading electronically. This also relates to what is called the NASDAQ Composite, which is an index of 3,000 companies focused in technology and biotech giants like, again, Apple, Microsoft, Google, Amazon, and Intel. The Russell 2000 Index is an index measuring the performance of approximately 2,000 smallest cap American companies in the Russell 3000 Index, which is made up of 3,000 of the largest U.S. stocks. This index makes up 98% of the investable companies inside the stock exchange. This index is very important because it measures how well the smaller companies are doing. Huge companies can't do everything, but with every company big and small, miracles can happen. So what can you get from these 4 index averages that are indeed investable? Don't invest in them. These things are not safe investments, and let me tell you why. Say you want to invest in the uranium business worldwide. But guess what? There is an insane meltdown akin to Chernobyl, and SCP-089 takes out 20% of the uranium production. You lose money. Investing in all of that uranium worldwide is not smart, because you never know what will happen throughout the world. This is a direct comparison to these indexes. These things literally track how the world is doing. And if a new sickness comes out like the coronavirus, or if World War III breaks out, guess what? There goes your thousands of dollars. Now, on the other side, if you invested in the uranium business in only America, or only in a certain state in America, you can have a bigger advantage because you have less trends to look at on where to put your money. This is the direct comparison to investing in, say, Walmart or Costco. A big and profitable company that is focused in small areas compared to the rest of the world. Don't have the money to invest in stocks, but you're still interested? Well, I have a game for you. Take 10,000, 20,000, 50,000, or whatever, and put this amount in a spreadsheet. Go on your local finance app where you can look at current stock prices and start investing. Put more money into companies you trust and put less money into high-risk, high-reward companies. And then twice a week, track those stocks to see how you're doing. You can see if you're making money, losing money, and if you start losing money and see a trend going negatively or positively, pull some stock money you have currently and reinvest for a chance of a profit. As you can see with my spreadsheet, since August I've been invested in 5 companies: Nvidia, a computer part company; Sprint, a phone service company; CarMax, a car retailer; Yum Foods, the parent company of Taco Bell and KFC; and Ethereum, a cryptocurrency. Around the holidays, I sold all of my stocks in Sprint and sold some stocks in CarMax to, instead of investing in Sprint, invest in Crown Castle International, a company that has been building 5G towers. So here comes the end of the video, and maybe only one of you are wondering, Kiwi, now who would you invest in? Here are my 5 answers. Disney. Stock has been falling because of the coronavirus. Before any medicine or vaccine comes out, invest now. That will be at the lowest cost the stock will ever probably be again. Crown Castle International. You could invest in any of these 5G companies, but if you can right now, invest. If this new generation of network will happen, thousands and thousands of towers are going to need to be built throughout the world. Invest right now. Ethereum. I suggest Ethereum because now it's a mid-tier stock that are slightly affordable, unlike Bitcoin. With the transition of a new digital life, physical capital will become obsolete. This will result in one day cryptocurrency becoming the main form of currency used throughout the world. Airlines. Pick one of them that everyone likes, not United or Delta, but anything else. The coronavirus has killed travel. Once a cure comes out, travel percentages will skyrocket like never before. Invest
ASAP Rocky.
Any tech company that was slightly affordable before the coronavirus. I would suggest maybe Intel, Nvidia, AMD, Samsung, or Microsoft. Coronavirus has halted a lot of production in Asian countries. While their stock is low, invest right now. Anyways, guys, that was it. Thank you guys for watching. I've kind of gained an interest over the past year in this kind of stuff, and I wanted to share my first grade perspective. Also, thank you to Kai, my girl, and Z-Patty, my sugar daddy, for helping me with a couple lines in this video. Their Twitters will be linked in the description below. If you like the video, share the video if you want, like the video, and comment down below if you see anything I can improve on for any future content. Thank you again for watching, and I'll see you in the next video. Goodbye.